Welcome back to Explain the Charts, everyone. Today is August 4th, 2025, and we're diving deep into Apple stock, ticker Apple, a tech giant that has been making headlines, especially after its recent Q3 2025 earnings report. First, let's contextualize the current market sentiment around Apple with the latest news. Despite reporting strong Q3 results on July 31st, beating Wall Street expectations with revenue up 10% year-over-year and diluted EPS up 12%, AAPL's stock has faced significant headwinds. iPhone sales and services revenue showed robust growth, increasing by 13% each, marking Apple's strongest revenue growth since December 2021. However, looking at the performance, Apple shares closed at $202.38 on August 1st, representing a 2.5% decrease from the previous close. Over the past week, Apple stock has fallen over 5.7%, and it's down approximately 19% for the year, exhibiting what many analysts are calling a death cross-chart pattern. Now, why the disconnect between strong earnings and a falling stock price? Several challenges loom. Apple incurred $800 million in tariff-related costs in Q3 and expects a staggering $1.1 billion in the upcoming quarter, particularly concerning potential tariffs on iPhones manufactured in India. There are also growing concerns about Apple's innovation pace, especially in the competitive AI race, where some believe they're lagging competitors like Microsoft and Meta, with Siri needing significant improvements. Furthermore, potential smartphone market share loss in China due to competition from Huawei and folding screen devices, along with the risk of losing traffic acquisition cost payments from Google, are all weighing heavily on investor sentiment. Despite these challenges, analysts maintain a moderate buy consensus rating with an average price target of $238.54, forecasting nearly an 18% increase over the next year, though the lowest target is $160. Let's move to the charts now and see how these narratives play out visually. Starting with the one-day chart, we can clearly see the broader downtrend that has led to the death cross pattern mentioned in the news. Looking back from late 2024 into 2025, Apple peaked around the $250 to $260 mark and has since been on a consistent decline, punctuated by volatile reactions to news. Notice the significant price action around July 31st and August 1st. On July 31st, the day earnings were reported, the stock closed at $207.57, but if we look at the candle for August 1st, it opened much higher at $210.86 and even briefly hit a high of $213.58. This initial surge likely reflected the positive reaction to the earnings beat. However, the market quickly digested the accompanying concerns, particularly the tariff costs and AI fears, leading to a dramatic sell-off throughout the day, closing at a painful $202.38, near its daily low of $201.50 on very high volume. This indicates that the bearish sentiment from the underlying concerns heavily outweighed the positive earnings news. Zooming into the one-hour chart gives us a clearer picture of this recent volatility. We can observe the price consolidating in the $208 to $215 range leading up to the earnings report. The candles show heightened activity and wider ranges around the July 31st and August 1st period. The long upper wick on the August 1st daily candle, combined with the subsequent sharp drop on the hourly, truly underscores the battle between bulls and bears following the news. The overall structure on this time frame indicates continued downward pressure, with lower highs and lower lows forming since mid-July. For even finer detail, let's examine the 15-minute chart, specifically focusing on the trading day of August 1st, 2025, from 7:52 Universal Time Coordinated. This narrow window clearly illustrates the relentless selling pressure that dominated the day after the market open. You can see a series of red candles indicating consecutive declines as the price moved from around $211 down towards the $202 range. The large volume accompanying these drops confirms strong institutional selling or profit-taking as the market reacted negatively to the forward-looking challenges mentioned in the earnings call, overshadowing the good quarterly numbers. This rapid decline after an initial price pump is a classic sign of sell-the-news reaction, especially when underlying concerns are significant. Let's switch back to the daily chart to outline key price levels. The immediate support to watch is the $201.50 level, which was the low hit on August 1st. A sustained break below this would likely open the door to further downside, with the next significant support zone around $190 to $195. On the resistance side, the $207.57 level, yesterday's closing price before the big drop, now acts as immediate resistance. Above that, we're looking at the $212 to $215 range, which has acted as resistance in mid-July. Beyond that, the $220 to $225 range is a tougher resistance level. For traders, watching volume is crucial. High volume on a breakout or breakdown provides stronger confirmation. The VWAP indicator can also provide insights into average price weighted by volume, which can suggest whether buying or selling pressure is dominating. So, are we bullish or bearish on Apple? In the short term, the momentum appears bearish due to the death cross, the 19% year-to-date decline, and the stock's failure to hold its ground after strong earnings. The looming tariff costs and innovation concerns are significant short-term headwinds. However, for the long term, there are reasons to be cautiously bullish. Apple's core business, especially iPhone and services, continues to show strong growth, beating analyst expectations. The company also announced a cash dividend, which signals financial health and commitment to shareholders. The analyst consensus for a moderate buy and a $238 price target suggest underlying confidence that Apple can overcome its current challenges. A reversal in sentiment might occur if Apple unveils a compelling AI strategy or resolves tariff issues, but until then, caution is advised. Look for clear breakout patterns above resistance or bounces off strong support zones, confirmed by increased volume, before committing to long positions. Conversely, a break below key support levels with high volume would reinforce a bearish outlook and could signal opportunities for short positions. To recap, the immediate price levels to watch are the $201.50 support and the $207.57 resistance. A clear break below 201.50, especially on higher volume, is highly likely, perhaps 70% chance, to lead to a test of the $190 level, reinforced by continued negative news about tariffs or AI setbacks. Conversely, a sustained move above 207.57 and subsequently $212 to $215 is less likely in the short term, perhaps a 30% chance, but could happen if there's significant positive news on Apple's AI development or a resolution to global trade tensions. Keep an eye on upcoming news regarding Apple's AI initiatives and any developments concerning the tariff situation, as these will be critical catalysts. Also, monitor the stock's dividend payout on August 14th, as investor sentiment leading up to and after this event could influence price stability. Thank you for joining us on Explain the Charts for this deep dive into Apple. Trade smart, stay informed, and we'll see you in the next video.